All right, so there are a few reasons why you shouldn't put a large payment down when purchasing a home. So when buying a home, a lot of people think that, oh, I need to put a large amount of money down because it's going to make a big difference in my payment. But I want to give you some reasons why that thought process may not be advantageous for the everyday consumer. Now, I'm not saying that putting a large amount of money down isn't ideal for certain clients, but I also want to give you a few different ways to look at the scenario. I recently had a client, they purchased a home somewhere around the $750,000 range, and they put 20% down because they didn't want to have PMI, which is private mortgage insurance. Well, we went over some numbers with them and kind of explained to them how much their PMI was, over the course, which was it was less than $100 a month, right? So on a $700,000 home, they're putting $100,000+ down. And I kind of told them, hey, in order for you to just see the benefit of putting this 20% down because you want to save the PMI, it will take you X amount of months to get that savings. They still were adamant about putting that money down, but I wanted to explain to them that in this climate and this market, having that money in their pocket would have made a lot more sense in the long run. But they were a little bit more cash heavy, and they were the type of client that if they put 20% down, it wasn't going to make a big difference in their bottom line, if you know what I mean. Now, sometimes you have clients who think they need to put 20% down because they think that they need that amount down in order to purchase. And that's just simply not true. And sometimes it just doesn't make sense to put that much money down. And I'll break it down and show you just some scenarios that you can kind of see, oh, wow, I can save this money from my pocket. And then I'll also break down and show you, listen, 20% down is only saving you X amount of dollars a month. If you're not going to stay there long term, it may not make sense for you to do that as well. So I just want you to take those things into consideration as well. Listen, 20% down used to be the thing, but now there's so many different programs where, number one, you don't need to put money down. In some instances, like VA loans and USDA loans. And then there's programs like FHA, which only require 3.5% down. And then there are some conventional products that even allow for you to do as little as 1% down, depending on your lender. It's not always the best idea to do 20% down. And even if you have the money, I've had a scenario where a client purchased a home after they sold the home that they had. And guess what? They wanted to put 20% down. Well, we broke down the numbers for the client with how much they were going to be saving, how long they planned on staying in that home, and they just didn't think it was worth doing 20% down after we went through that scenario. Now, I'm not saying that that will be your case. A lot of times I get clients and we go through the 20% down scenario. We go through their break-even point. We go through how long are you going to stay in this property? And then they decide that they still want to do that 20% down, which I understand. Every client is a little bit different. In that client's case where she sold a home, she actually wanted to have a little bit more money in her pocket in the long run. So not putting 20% down made a lot more sense for her.